Hello everyone! Welcome back to Neffy Cat. We're all so glad that you can be here today, and thank you very much for joining. On today's video, I want to talk about something extremely important. And yesterday's video we're going to end up having some review of because of how important that factor is. I want to discuss risk management. A lot of people, when they get into the stock market, they don't know to determine risk management and to go ahead and plan for it ahead of time. Instead, they'll just have things happen in the market and they won't know how to handle it. And it will take a hold of them and take their money. Risk management enables you to have profits. It gives you tendies. It's very good it's very important for a portfolio to have. And somebody keeps affecting the stock market. So, one of the first things that we know, that we discussed yesterday with risk management, is to know your catalysts. I'm probably going to spill some of this, by the way, but see how that just mixed in there? That's like an item, an event affecting the market. And if you're not aware of what that's going to be, it can turn your profits red very quickly when you really want to have these green profits that this little tail is around. Yes, look at that little tail. This little tail supports a green market. Knowing your risks enables that to exist. And remember yesterday how we were talking about the catalysts for a kitty to know when to hunt. Yes, well, this is very true for the stock market as well. And I'm going to go back into these. So for one of the first things you need to know is the overall market catalyst. You need to know what's going on in the broad spectrum. What if you have, what if the bond yields are raising? That's going to make the stock market crash. Part of the reason for that is because if the bond yields rate, it means that people aren't buying into bonds and that they're having to, increase the rate, the bond yield rate to attract people to buy into the bonds. And then another factor, of course, is interest rates raising. A lot of us know about the tapering that's starting to happen in our market. That's definitely an overall catalyst. Well, there's going to be some points where the Fed may very well decide to raise interest rates. And that right there is going to strongly affect the market because it will mean that it'll be much more expensive for people to borrow money, take on margin, that's called. And unfortunately, this day and age, right now, at the time we're recording this even, there is a high margin rate in the stock market. I personally don't think that that's the wisest thing. But those with wealth who already have a lot of money, who already have a lot of leeway financially, because they have very carefully crafted that, can manage, to take on margin. I really, just like credit card debt or something, I think it's something to be really careful with. But that is a particular, if the interest rates raise, that's definitely going to affect it. And something recent that we talked about yesterday is a COVID variant. That's going to affect the overall market. And that's also going to affect certain sectors within the market. We mentioned that yesterday. So we mentioned how you need to know the overall sector catalysts as well. Like you might need to know, for example, in recent months, in fact, most of this year, we've had a chip shortage. So every company, such as some of the EV companies, or how about a computer, companies that put together laptops and computers, or even cell phones, there may be chip shortages that affect that. And so those particular stocks might go for a lot less. It may, you'd have to look for the specific ones, of course, as well. But when that overall sector is cooling off because of a catalyst like the chip shortage, it's going to affect the stock that you might be interested in. And you want to pay attention to that. So like, let's say that you've traded into Tesla. Well, what if it is affected by it? Or right now we have issues over China currently and threatening to delist this, or telling this one company to delist, and it's affecting the other ones. Let's say that you like an EV stock such as Lucid, which is made there. It has a lot of their cars there as well. Lucid, I do believe, has some in America too, but don't quote me on that. Nonetheless, because of other things, because of that Chinese issue, that whole sector in the Chinese types of stocks could be affected. And so they're going to be down. They're going to be more red. And if you study the catalyst and you find out and you realize, you know what, this is going to get better after a while, then you might still decide to trade into the dip on one of those stocks. And that's something that's a personal decision, as always. Always regard that about financial decisions in trading and in things that you do financially. Financial advisors are nice, and YouTubers were, in my case, I'm not even a financial advisor, but they may have a lot of things they recommend. But always remember that that's only a recommendation, and it's very important for you to do your own due diligence, which is another important piece of risk management, is doing your own due diligence, doing your own personal study so that you can make wise financial decisions. And then, of course, you need to know, I'm going to use the temptations here as a symbol of this, but you also need to know catalysts that are affecting a specific company. A company may have had, that car horn agrees. A company may have had, they may have had a share offering. They may be buying back some of their shares, for example, in order to, they may be buying back shares in order to raise the price of their stock, or they may think that the stock is really high, the stock price is really high, and they may they may do a share offering, which means they're going to put more shares up for sale. And sometimes that can give them access to more capital as more people buy in, but it also has that side effect of dropping the stock's price, and that will affect an individual stock. So that is also very important that you know that. Now, I want to touch for a minute on due diligence. This one is just like some of the things we talked about yesterday. I can't stress how important that is strong enough. You've got to develop your own way of studying, learn from people like me, learn from other YouTubers, but then develop your own styles, your own strategies, and do your own due diligence, do your own research about the fundamentals and the technical analysis of a company. Another important thing that I have mentioned in a recent video is to make sure that that you have concrete entry and exit plans in place before you trade into a stock. Look, for example, you might like to look at where the support tends to go, how high that stock tends to go before it starts to peter out, so that you'll know that you could sell it if you see it start to bottom out there. Or the other reverse, you kind of get an idea, well, this is a strong support line that this stock often bounces off of, has been bouncing off of, and then you can decide from there to buy into it. But that would be a good entry point. So also, there's some people who will enter a stock that's at its all-time year low. There's other people that will buy into a stock that is just starting to have a momentum trade, a momentum movement with all sorts of buyers coming in and raising the price. They may try to catch that. They may try to catch it and then sell it out when that price has gone up far and then starts to drop. So really keep your eye. Another area that's really important is, especially for the momentum trades, but for any really, is to set stop losses. Those really matter, and especially for those of you who are working and for those of you who are afraid of selling out when you might need to, and who have, how do I say this? There's a certain amount of money that you need to be willing to lose or to gain, and you need to kind of decide that ahead of time. Stop losses can help with that. If you have something preset so that if it falls a certain amount, it's going to sell off your stock so that you won't have large losses, that is definite risk management and is definitely wise and important. Keep your eyes also on the price action. Keep yourself aware of how much that stock is rising and falling. That's also important. Yes, there may be reasons to buy in more. Yes, like this. You may have some reasons to buy in more. Yes. He's got reasons to hunt, doesn't he? Yes, he's got reason to play. He's got a catalyst. He said, this is my butterfly, my string. I'm going to see if I can get the butterfly off the string. Look at the different types of behaviors of that stock. That's also a really important thing. Look on the price charts. Don't just use one. Even if you do want to day trade, I really recommend that you don't just use the minute chart, that you don't just use the 2-minute chart, but that you do get an idea of where that stock has been. Like, for example, if you have, a 3-year or 4-year long downtrend and the stock is just going down over time, that might not be a good stock to get into. You might not want to go into that one. If you find that it's at all-time highs, then you might not necessarily want to get into that stock. But you're not going to find that just by looking on the minute chart. If you look on the year chart, you're going to notice those things. If you look on, at least on the day chart or the week chart, you're going to start noticing those things. And another thing, another thing is to notice the way that it behaves. What levels of support does it go down to? What time of the year does it fall? What type of catalysts make it rise? Pay attention to those things, because then you can make wise decisions about when to enter and when to exit. Okay. And another one that I wanted to mention, this happened this past year. Some of you might know about the GameStop movement and the AMC movement. Well, I really recommend when you get into trading that when you're looking for a good broker, you look to find out what their policy is on when you have extreme stock movement. So they sometimes, like this particular event I was mentioning was called a Black Swan event by a lot of different places. But you want to know what their policy is. Are they going to halt trading from all the traders on their site from being able to buy the stock? Another piece of that's important to note, when you have a stock that's going crazy, either selling off too fast or buying in too fast, sometimes the market itself will actually pause that stock momentarily. That's usually only several minutes long. But you need to know how your broker handles those things. What are their policies? How are they making their money? Knowing those things can help you in case any type of swan event does happen. And of course, really, I'll go back to setting stop losses. You can do that through trailing stop losses or through an actual money percentage. I can't stress how important that is. That will save your account many, many times. Yes. Well, thank you all so very much for spending some time with us this day and watching this video. Don't forget to take those paws and press that like button. And please press the subscribe button so you can see all of his videos, and the notification bell. You can see all of the videos that he makes and that I make. Thank you so very much. I appreciate your sharing this time with us today, and I want to continue to be able to share these important little things with you, because they make all the difference in the world when it comes to your trading and into your success in the stock market and in financial education. Thank you, everyone. I look forward to seeing you, and he does too, in the next video. Have a wonderful day.